Welcome all to our regular session here with Sanlam Investments. My name is Bason van Rooyen. I'm the portfolio manager here in Namibia. To my left here, John Morgan Besaidnout joining me today. We just come back to our regular sessions. We want to share a little bit of our thoughts, our insight, what we're seeing happening around the market, and to really try and share that, what we're seeing in the back office of the closed doors, to really get it out in public, to start this discussion, to really see what's happening out there on the streets. So I think today we're going to try and cover a very topical issue, and I think it's one, that you always hear, the newspapers, the headlines about, the growth and the contractions, the recessions, and, the impact of COVID on it. But we're trying to really just, dissect it and unpack it a little bit today around the Namibian GDP, what's been happening with our growth, not just the last quarter's print, but really looking a little bit back to our history, what's been happening with the trends, what's been happening with the industries, and to try and then put that in perspective, really on how we say the growth will be happening and where the growth will be coming from, to try and really show you the way that we look at GDP growth. So John Morgan, we've recently had, our June print for 2021 coming out. It was a positive one for a change, but I think there were some nuances that we really need to try and unpack. So if I can hand over to you, just take us through what's been happening with the NSA report coming out and what's been happening with the trends.
Absolutely, thanks Bason. So Bason is very excited about the positive print, 1.6% in green territory. Myself, however, I'm not too excited. I do think this is very lackluster, especially if you put into consideration that it is coming from a very, very low base. If you look at most of the economies around the world, COVID-19, especially the lockdowns, have had a serious impact on growth. And, it's intuitive to just expect GDP to shoot back up very quickly after that. And we've seen very strong V-shaped type of recoveries in places like the US. I mean, the recent print is a bit shaky, but that's a topic for another day. In terms of Namibia, one other point I wanted to bring forth is that if you look at the graph, which I'm going to put up here on the screen, it looks like we have been trading sideways since 2014. It seems like our GDP peak has actually been in 2016. That's when we started seeing a lot of downward pressure, especially in terms of spending power of consumers and also just general economic activity. But I think also another important point to note is that in terms of structural changes versus cyclical changes in our economy, the biggest drivers downward must have been the tourism sector, which definitely does employ a lot of people. And I think if you look at retail has also kind of changed, especially since people are now purchasing products online as opposed to actually going into stores and into malls. So we have a couple of companies that are more dependent on that. They've taken a lot of pressure. But I think, in terms of that, that's what I wanted to bring forth here in terms of our GDP prints. Is there anything you wanted to add?
Yeah, and I think it's interesting if you just look at the slides, really put into periods. So, we've been very negative around COVID, and has been extreme sort of event around the world, around, supply chains being sort of cut off, forced lockdowns, slowing down demand, a lot of sentiment change, really industries investments slowing down. I think there's no argument around GDP. If you look at the 2020 numbers, there's been a massive impact. So I think that sort of we agree with. But the thing is to remember, and I think that the problem is also been seeing in Namibia since 2014, as John has been saying, is we've had a very sideways movement in our GDP, and effectively hasn't had any real growth in the size of our GDP in the last 10 years, effectively. And I think if you look at now the GDP the contraction in the GDP around COVID, it's put us back on a level that we've seen in GDP size back in 2014. So that's really an 8-year sort of lost growth environment that we've been in. And I think that's sort of important to sort of see the periods that we've gone from a tepid, no growth sort of environment to a contraction in COVID. And I think we really need to change, to turn this tide around, and to look at what we can do forward. So I think, John, let's just chat a little bit about the industries to try and put into perspective. So what is the big contributors to this Namibian GDP print?
All right, so I'm going to put up another slide for you here. As you can see, the bubbles actually represents the weighting of the industry, just to make it very easy. But when looking at the results, big results were a negative print from financial intermediation. So that's 17% down. It had a very negative effect. Another very big, not surprise, but a very big contributor in terms of just return was your hotels and restaurants, returning 34%. Now, as you can see on the slide, it's a very small bubble, meaning the weighting is relatively low in terms of what it produces in the economy. But I think it's important to note that hotels and restaurants and also the agricultural sector actually does employ a lot of Namibians. So that is some light at the end of the tunnel, I must say, but it did take a beating with obviously the lockdowns globally. Another positive print we saw there was fishing coming in at about 14%. It's a mediocre, not mediocre, it's about middle in the pack in terms of weighting. But I do think to bring it all into perspective, by just looking at some of the negative contributors, if we're going to see this economy turn around, we need to see some positive economic growth or activity coming specifically out of, I would say, the manufacturing, mining and quarrying, and perhaps, did I mention agriculture? Perhaps agriculture as well, mainly because it does employ a lot of people. I think it's the largest employer, about more than 20% of Namibia's employment comes out of the agricultural sector. So if we can somehow get these industries to start being more active and printing positively, I think we can see a strong return to normal levels. And just to put into perspective, mining and quarrying and also the manufacturing sector in Namibia, it is mainly dominated by diamond production and also diamond polishing and manufacturing. So we are somewhat dependent on commodity prices, very specific commodities that are idiosyncratic to Namibia. But that's just important to note, and that is somehow also affected by global phenomena, which we will be discussing later in the podcast. So onto this next slide, which I really enjoy. I just put this slide together so to basically dovetail what I just said. Most of the economic activity in Namibia does come out of the tertiary sector, so that is
which is very interesting, being a developing economy.
Exactly, it's very different. It's peculiar. Usually, you'd find developing economies unlocking value through the primary and secondary sector. So that's mining and then manufacturing of your mining production. But the point I was trying to make here is that if you look at our primary and secondary sectors, it will be your agriculture, it'll be fishing, it'll be what's the other one? I think manufacturing as well, which is mainly dependent on diamonds. But these are more labor-intensive sectors, but it's very interesting to see that they don't produce as much as the tertiary sector, which is more service-based. So you have computers that'll help you with your output. So we're in the tertiary sector, financial services. But this puts us in a very peculiar position, and I think this is one of the reasons why we actually have one of the highest levels of inequality, wealth inequality in the world. I think we're just second to South Africa in terms of income inequality, and I think that is a product because of this split. So if we're really going to turn things around, and I think we do have a certain responsibility as investors and asset managers to also develop the primary and secondary sectors, and what we actually do have, and Bason is the portfolio manager of this fund, we have an unlisted debt fund in which we actually invest into private businesses that have some type of record of past performances and cash flows, but we really try and empower the entrepreneur, especially if you're in primary and secondary sector, if you're part of youth, and if you're female or previously disadvantaged, we really look into that. And the benefit of that is because as an investor, we're the ones providing the capital, and what that ultimately does is it allows us to have a say in trending topics such as ESG. We can actually influence these companies to take that into consideration or to have more of a development ethos. And I'm just a very big fan of that development tilt.
And I think it's very important that we keep in mind, so you really need to change the sentiment around. And I think COVID has brought out a period that everybody was sort of scared to spend money. Businesses were scared to expand. We can have consolidation of shops, of office space. Everybody talking about downsizing, working from home. And I think it's really important to sort of keep in mind that to change this trend around, we really need investment into our industries and really into that entrepreneurs, into the growth aspects of our economy. And I think that's why you can't rely only on your banks that gives you a very traditional, stable financing to somebody that's got a very sort of, strong financial sort of history and sort of a asset base that gives security, most times, a large property portfolio, that you really have to try and support sort of the financing and the investments outside of the traditional banking system. Something like a private equity, venture capitalist, small and medium enterprises, sort of financing, and then I think that's really important to sort of try and change this sentiment and this
just
trend.
To bring it a full circle again, it just popped into my mind. Actually, if we can develop your primary and your secondary sectors, and they employ most of the people, that indirectly then also funds into the tertiary sector, because now banks have more people they can lend money to. They could probably take more risk if the economy is growing. They can have access to cheaper capital. So I do think it's paramount to look at these primary and secondary sectors and maybe see if we can't change this around. I mean, it's very ambitious to say that directly, but we are playing our role and we are taking a responsibility in that sense.
So no, definitely very important. I think now to sort of go into the next point, and I think it's important to put again into perspective. So we said we've gone from a period that we've seen sort of very tepid growth from 2014 onwards, and then this COVID contraction, the last 2 years. But if we see how the government has sort of been running their purse, their government budgets, it's very important to sort of look at the deficits and the surplus of your budget spending. Because in a large part, if we follow sort of the modern monetary theory, that you can use your government spending to really stimulate the economy. So you push in more capital, you go on to debt, you lend as a country to really try and stimulate this economy. And we've been running a budget deficit for a very long time from Namibia. So if you look at the slide, so basically from 2019, we've been running a budget deficit. And the problem with that is, or the interesting one is that, the period of 2019 to 2014, we've seen some very good growth in Namibia, but we were running a budget deficit to even support it, even, put more fuel in the fire. And I think that's a large part of the reason why we've had such an incredibly good GDP growth or good, economic growth and period in Namibia. A lot of businesses thriving is because of this government spending, this government financing being pushed into the economy. And from 2014, you've had a period that the economy was moving, sideways, and you've sort of seen that the government, continues to run these budget deficits, but not really being able to stimulate and support the economies. And now in the last 2 years, you've got a contraction, and from monetary theory, you would want to, only when you reach the contraction stage, to then run a budget deficit, spend money, where the opposite should have been in the good years. You should have been running a budget surplus, saving money, lowering your debt, investing into infrastructure. And I think the problem is, one of the large problems was we've been running too early, too hot on the budget deficit to try and support our economies. So this budget deficit has been running 2009 has sort of had a very impact on our government debt. And I think that's sort of in the slide. I think everybody's sort of a big topical point, but just put into perspective, you can really see that it's been very, stable up until that 2009-2010 period. And once we started running that budget deficits, that's when the government sort of debt has really ballooned. And it's gone from a level, around the 20% to around 80%. When we're expecting the midterm budget coming out later, sort of in the next week or two, we're expecting a print of probably over 100% of GDP for government debt. And I think the problem is now, the time that you want the powder in the keg to be able to, go out there, all pistons firing and support the economy, the government doesn't have, that scope to really run a larger budget deficit and to spend in it. And I think that's one of the difficult situations that we find ourselves in now, is because of our very good growth up to the 2014-15 period, running debt to do it. We've now don't have that sort of fiscal space to move in to sort of increase our sort of government spending in the period going forward.
Just to throw a little spanner into the works there, it just crossed my mind while you were talking. So the government does not have firing power to actually stimulate this economy at this point in junction, because obviously it doesn't have the money, to put it quite bluntly. But as a private sector participant or an asset manager or an investor, if we look at Namibia's dynamics, we probably have one of the highest savings levels per capita on the continent. If you take it even to a global picture, we saw people buying NFTs for $2.9 million. I don't think capital is that much of an issue. As a private sector participant, how do you think we can funnel and attract capital, not only locally, but also abroad, into the Namibian economy?
Yeah, so I think, there is a lot of capital available, and especially around the world, if you say we're running in this extremely low interest rate environment, there is a lot of capital looking for a house or for a investment vehicle to be invested in. I unfortunately think the one thing that we're getting wrong in Namibia is just the policy certainty and that sentiment. There's very little, to really make us sort of really want to invest into Namibia. We've had the port construction, in Walvis Bay, and that was sort of a very, on a scale, extremely large investment. We had the uranium mines, opening up, and that was extremely good investment in our countries. But since then, it's sort of really died down. Mm-hmm. So it feels like there's very little positivity around sort of wanting to invest in Namibia. And I think, unfortunately, one of the problems is just this policy uncertainty. So either way you want to go with it, there's a lot of talk around, policy being brought in and being changed and being updated, be done. Yeah. But I think the biggest problem, in my view, one of the big problems is just the uncertainty. You don't know when which policy will be changed or being implemented.
I think that's a good point to then just mention that also in terms of our unlisted debt fund. if you do invest into the unlisted debt fund, there is some type of governance through our professional networks to make sure that these investments are proper and have proper due diligences and are of good quality. So I think bringing that up is a very important point, that it's difficult to find adequate investments in Namibia because of the uncertainty. But our team at Sanlam Investments would guarantee you that we can definitely find lucrative investment opportunities.
Always try our best, never guarantee. But I think that's what a policy uncertainty, John, I think is a very large one. But I think that's definitely not the only sort of negative thing we have around to be able to change this. And I think you've really highlighting or to highlight another one that we really see a big problem around being able to change this trend.
Absolutely. So I put this slide on youth unemployment in. It's very close to my heart as I'm youth. I'm Namibian, and I know the struggles people go through to be employed. It's very difficult at this point. But I also wanted I put this in to have us focus more on a forward-looking projectile. So if we are going to recover this economy, we need the youth to be a part of it. We need people to be included. We need pro-poor economic growth. This is one problem I've picked up. Namibia's employment or youth unemployment is mostly driven by people who have the highest qualification of a junior secondary certificate, which is a grade 10, to put into perspective. This makes it difficult because most of our economic activity does come out of the tertiary sector, so there's really no home for these students, or not students, for these Namibians to go into as youth. So that's why I think it's very important and almost paramount to be investing into your primary and secondary sectors, not only in terms of very basic farming operations, etc., but I think we should look at things like fintech and just get people involved. And I think one thing that Namibia is not looking at, which is being overlooked, is just bringing internet connectivity to all the regions in Namibia, to have people involved and people to understand that there are opportunities to get out of the situation you're in. But yeah, I think this is a very big problem. I do not have the answer for it. I don't know how we're going to curb youth unemployment. I think looking down the line, we're going to have a serious deficit of even skillful workers. I mean, if you think about just asset management, the industry that we're in, if you don't have people trained as analysts, there's no way they can become portfolio managers. So if we don't look after the youth right now, we're going to sit in a serious problem. But I thought it was just very interesting to show that most of our employment comes out of our primary and secondary sectors, even more primary than secondary in this case. But we're not giving a lot of thought and investment into that. So, I mean, it's easy to talk about these things, but I think it's important to also invest and put your money where your mouth is.
Then I think really to say, but what needs to be done? What do we need? We've talked about a bit about policy, a bit about youth unemployment, a bit about, youth education. But I think it's important now to sort of look at, what can we see some positive lights? Where does that growth or that spark that really changes the trend does come from? So I think it is important to then sort of look at, but where do we see, our income being generated from? And the one important one is, what do we export into the world economy? So this slide just really shows you our large exports by percentage-wise. So it is really interesting. If you look at it, our largest exports is actually in the primary sector. It is exporting mineral products. It's exporting copper, it's exporting zinc, it's exporting diamonds. That is a very, very important part of our economy. And I think if we look at sort of the growth outlook, where the change can come from, there's some very interesting trends being seen around the world from the commodity pricing perspective. So I think that'll be interesting to sort of just really share a few slides, a few of our thoughts, that if you do say, but where will the growth come from? And I think that's part of what we do have some positive outlook on, is really what we're seeing on the commodity growth perspective, the world growth of the commodity prices. As we're seeing the world going from, this is very much a COVID, supply sort of, lockdown, supply chains being sort of stopped or halted, running back to, growing economy, back with the manufacturing on full tilt, needing all of these resources. We do expect some positive moves in the commodity prices. And I think that's when you look at what is in Namibia is the important commodities. So I think normally when everybody speaks about commodities, the one is, the oil price. And I think the oil price is really, it's a supply demand, question, but there's a lot of other items that is sort of working on, with the oil price and the industries being run up. But the oil price actually has very little impact on our income or our exports as a country, as we don't have any, oil type of exports. I know we've got a lot of talk around the platinum, the PGM prices, but as a country I think it's important to sort of keep into perspective what is it that we focus on as a primary sources and as exporting. And I think what has they been doing? And I think that's just to put in perspective. So the big one is always diamonds, which is the industrial space. The diamonds used for industries. They've had actually some good growth in the diamond prices, but on an overall basis, diamond prices have still been under a large pressure, and hasn't seen a lot of growth. Gold is an interesting one. I think the gold price has very little to do with how much gold is taken out of the ground, but the gold price has really not seen a massive or a significant change in direction in the last year or two. Where the other sort of smaller ones, copper and zinc, I think we've seen the prices, but it is then to say, but how does our outlook on the commodities, especially on diamonds and gold, sort of try and sort of play into the Namibian GDP growth space? Yeah. So John, can you maybe take us a little bit just what we're seeing? So I hope that I've put into perspective now, what is from Namibia, how important our mineral exports is, what is our important mineral exports. And I think, John, can you take us a little bit just through the world sort of prices on commodities and what we're seeing happening?
Absolutely. So I think a lot of these prices are driven by the demand side, which I think is good. It's definitely the type of pressure I would look for, for it to come from the demand side. So firstly, we have that very big infrastructure bill from the USA. Biden's administration are committing to an infrastructure deal in terms of development, and that's been obviously driving up prices such as copper. And I think copper is one of the commodities which we have actually benefited from in terms of its price going up, and we're a big exporter. On the other hand, iron ore also had a very strong uptick on the basis of demand. However, I don't think that's pretty much exposed to us. As you can see on the previous slides, we aren't really exposed to the iron ore price. But then just on the third point which you mentioned, PGMs, your platinum group metals, a very interesting story which I quite enjoy. It's also been driven mostly by demand, and that's because these minerals are actually used to manufacture batteries, which will be in turn used for electric vehicles. So there's a very strong global push that we're going to be replacing the internal combustion engine with electric vehicles. And I mean, you don't have to look very far. If you turn on your PC, you'll see there's always an update on Tesla's price, and it seems like the market is pricing that in to be a reality. I think countries in Europe also have time limits for companies to completely get rid of internal combustion engines. But yeah, if that's possible, I don't know, but what the market is saying is that they really do expect that. So we've seen that demand in these prices. So the market is pricing in a very green future, which requires a lot of mining and it requires a lot of resources. And then in terms of gold, you did mention we're not really, I mean, we are exposed to it because we do have some exports of gold, but it's not a very big contributor. I think the biggest ones would then be diamonds, which, the prices has seen a little bit of pressure there. But I think if you're looking at the recent commodity boom, and I put that in inverted commas, it was not sustainable. It was a very quick uptick, as you can see with these graphs, and it came down. The main beneficiaries, especially in the SADC region, I would say would be Angola, because they benefited from the oil price, and South Africa on the PGM front. But Namibia has not really benefited of it yet, and if we're going to benefit of it, what we'll need to see is, firstly, we need to see something a little bit more sustainable. And we're going to need to see businesses actually setting up shop in Namibia. So instead of just surveying potential mines, we need to actually see mines coming up and producing cash. That's my take. That's my 2 cents on that.
Yeah, and I think it is sort of, on the one hand, so I think it's very important to sort of, as sort of economist or investor looking into the market, to sort of have a look on where do we see the world growth coming through over the next few years. And I think it's sort of very widely sort of accepted that we would see sort of a continue seeing a good recovery after COVID, manufacturing doing a lot better. So I think it's very, very sort of looking towards a much more positive trend towards your commodity prices. And sort of we've been trying to put that in perspective, but I think a lot of countries, with the commodity producing sort of sectors is looking to have, support or positive impact from that part of the GDP.
Just one more thing, uranium did have an uptick. What's your take on that? Will that have a material effect on Namibia, or do you think it's still a bit early?
I think it's always difficult on the short term because of forward prices. So a lot of mines sort of fix their forward prices that they supply, and that's really to give the mine sort of a peace of mind to be able to manage their cash flow prediction. So we've seen definitely uptick in uranium prices, and I think in the short term we haven't seen a large impact on our GDP yet. But I do think if we see this trend going on, there is no argument, my mind that in the future it'll really start gaining momentum, really start turning sort of to be a positive, contributor, and being sort of a very large uranium exporter in the world space. I think it is a very important commodity from our space. So we haven't seen the numbers in sort of this June print sort of really sort of trying to make a difference. But I think the trend is very positive for Namibia, as we do have quite a large uranium deposit.
Okay, interesting. Cool.
Yeah, I think so. Also, I think sort of looking at what else can be done to really change this trend around, and really trying to sort of stimulate the economy. And then we've been talking about sort of the monetary policy, that you can run budget deficits to really you support your economies. Another way is really to be able to cut taxes, to be able to support businesses to want to invest and to want to spend more in a country and bring in more foreign capital. And I think that's also where we as Namibia find ourselves on a very difficult, dangerous place, because on the one hand we have extremely high reliance. More than a third of our revenue stream of government budget is generated by tax revenues. So for the government on the one hand to cut tax revenues is cutting their own income stream, or a large part of the income stream. And on the other hand, from government, you have got no scope to really increase it, because we're already on the highest sort of corporate tax rate on any sort of Southern African, any of our neighbors or our peers in Southern Africa. And then to sort of say, but from a GDP growth perspective, you really want, one of the stuff is to cut taxes to be able to sort of incentivize that investment in the country. So I think that's also the difficult place we find ourselves, not at only the high debt levels, but we don't want to cut our taxes, because then you're also going to cut further our income. So it is a very difficult balancing act that we have to get right as a country from our fiscal space. And then I think from my side, really to sort of step back and to say, but that we do need to change this trend around. But I do think that we do have, another thing going for us is that we do have a very sort of mineral-rich country with a very sort of, financially stable, economy. We've got some, very well, very stable political environment. And in the world perspective, although, if you look on to the right-hand side of the slide, it was touched on the Gini coefficient, but on a GDP per person, we are some of the highest sort of, on the highest side on the African continent. As your GDP per sort of population, we're probably one of the best countries in Africa. So I think that really does help us, that we're really that 1 foot ahead. But we've also got probably one of the smallest economies, on the African scale, and even on the world scale, being sort of a few basis points on the world GDP. It really doesn't take a hell of a lot from a world perspective, to be able to sort of want to invest into Namibia. And I feel that if we can really get sort of that policy certainty, change around, getting, looking at something like our taxes, or getting, to drive a foreign investor sort of, or to drive that narrative of getting the foreign investments, you really don't need a massive foreign investment on the world scale to really turn this around and to sort of say, but, we've looked at the port, we've looked at the uranium mines, but where can the second growth, or another sort of second growth phase, be coming from? And I think that we can really look at, and there's a lot of sort of talk being done around sort of the Presidential Advisory Council, and a lot of work being around it, but we really need that to sort of not only be talk, but really to be sort of implemented on the ground. But I think in the global scale, it doesn't take that much to be able to do that.
Thanks. That actually helps you with a very nice conclusion, because while you were talking, I was thinking, and as Namibians and as asset managers and as investors, we actually do have the capacity to turn this around. We have one of the biggest saving pools. I don't think we should be that dependent on foreign direct investment. And from Sanlam's side, what we are doing is we're investing into private equity. As mentioned earlier, we look at people who are not included in the banking sector, and we do exclude property. So in that fund, we do not invest into any property. We invest into ideas, and we invest into people, and we invest into the youth. So we hope to hear from you soon. We're expecting people to be curious about this fund. And with that, we'd like to say thank you for your time.
And as always, we hope you'll join us again in 2 weeks' time. But please remember to like and subscribe.
And
thank
comment.
you.
Cheers.